It's a showdown that many are anxiously watching, and the U.S. China trade war isn't just about two giants anymore. As Washington launches tariff negotiations with its partners, China is warning them not to cut deals that could hurt its interests. China is already facing punishing tariffs from its biggest trading partner, but have the stakes just gotten higher for its economy? I'm Divya Gopalan, and you're watching Connected. Well, to help us understand what's in store for China's economy, which in turn affects the global economy, we're joined by Wenchi Yu from Washington, D.C. She's a Harvard Kennedy School Fellow. And before we kick off, though, Wenchi, can we have a quick look at the GDP figures of China over the past few years? After a plunge at the start of the pandemic in early 2020, China's gross domestic product growth shot up 18.7% in the first quarter in 2021. And since then has remained steady, hovering at around 5%. But the GDP rise in the first quarter of this year beat many expectations, and that's including that of Beijing's at 5.4%. Wenchi, what do you make of these numbers, especially this is all coming in ahead of perhaps the bigger punch that the tariffs are about to serve China?
Yeah, thank you for having me, Divya. Well, let's look at the numbers, as you mentioned, right? What's interesting was almost 40% of the first quarter GDP growth was actually driven by exports, which was the highest share for this period in over a decade. And that's also up from last year when trade accounted for almost a third of overall growth. Now, if you look at China's trade surplus with the U.S., total $77 billion in the first quarter, accounting for 28% of its overall goods trade surplus. And no wonder Trump is so anxious and eager to address the trade deficit issue. Now, this growth is actually likely due to expected tariff hikes because everyone's been expecting these tariff hikes, especially with China, since Trump was elected. So many are stocking up goods before tariffs hit. So we're likely seeing this, big number of exports due to this I would say, this kind of anxiety.
Now, this seems to be somewhat of a knee-jerk reaction ahead of, as you said, the tariff hikes. But, even in Trump's first term, this was a focus for Trump. Tariffs against China, trying to, he said, even out that trade deficit. So how prepared was China for this kind of, or this level of rise of tariffs?
Well, we know that for the first time when Trump was in the White House, it came almost like a surprise, right? And it took them 2 years of negotiation to finally reach the trade agreement, but it was already towards the end of the Trump term. Of course, the Biden administration continued, didn't really lower the tariffs. So now came the second Trump administration. To be honest, Chinese companies and Chinese government have been preparing for this possibility. If you see, Chinese companies over the years have been diversifying their markets. Of course, many would say the U.S. remains their favorite, but given geopolitical risks and lots of U.S. restrictions, many companies have learned not to enter the U.S. market. So that's number one. And number two, if you look at the numbers again, right, in 2018, 21% of U.S. imports came from China. And by 2023, this number has fallen to 14%. And on the other hand, Chinese exports to the U.S. accounted for 3.5% of China's GDP in 2018. And at the end of 2023, they represented 2.9%. So it's also a significant decline. It's clear that the decoupling was happening prior to Trump 2.0, right? So these two countries have learned that there are so many risks that, being dependent on each other's economy is no longer the safe bet. So China has been implementing a number of measures to boost its own economic slowdown. As we know, China's economy hasn't been doing that well for the last few years, including some measures that to relax fiscal and monetary policy, cutting interest rates, injecting liquidity into the financial system, etc. More recently, the government is very focused on stimulating consumption by supporting employment, strengthening social security system, developing new consumption sectors, even subsidizing by giving vouchers to consumers in some municipalities, right, like Shanghai. So clearly, China has been preparing for this moment.
Right. And as far as the U.S., and you've previously said this on Taiwan Plus, that the kind of America Trump is trying to build is a self-sufficient America. And that seems to be what all these machinations are leading to. But at the same time, as we just heard earlier in our introduction here, that and it seems that Washington wants to now pressure other countries that deal with China during its negotiations as they negotiate their own tariffs with the U.S. to perhaps not engage or not give China that buffer. Why do you think that would be in Washington's interest?
Well, clearly, I think Washington also understands, China has become the largest trading partner to many, many countries. So if this high tariffs and, Washington, D.C. is not just targeting China for the tariffs, is, blanket tariffs and, high tariffs on many Asian countries and on Europe as well. So naturally, it is likely to have this reconfiguration of trading blocs, right? China could be trading more with Southeast Asian countries and Europe. And so I think Washington, D.C. is preemptively making sure that that is not going to happen, and is willing to negotiate with other countries if they're willing to not trade more with China. So that's kind of an interesting twist, I would say, by the Washington side. And of course, what we are seeing is also, Xi Jinping took a trip to Southeast Asia, visiting Cambodia, Vietnam, and Malaysia, also sending a message that they need to have a united front against this kind of bullying behavior. So, the two giant economies are clearly trying to form an alliance to make sure, the other side is not hurting itself more.
And Wenchi, from where you're sitting in Washington, what is the view there on these tariffs or on all these negotiations that's happening? Is there much talk about it in any way, or perhaps even some talk against it, saying that maybe we just let the markets do what the markets do?
That's almost everything that's being covered in the media and in the Capitol in Washington, D.C. these days. Of course, there are lots of questions and criticism of Trump's 2.0's tariff policies. And there are so many different levels. The first one is simply, is this even a good idea, right? What are we trying to accomplish here? Is bringing manufacturing back to America, making most Americans work in factories, really the ideal future for America? So there's one big question about it. And then second is really about the substance of those tariffs. How did those numbers come about? Were they, through some thoughtful process, to come up with those numbers? Nobody really knows, right? So there's a lot of question around that as well. And then third level is really the execution of it. It is Trump's rhetorics, is how Trump flip-flops, and how he constantly, threatens to put on tariffs, but, nobody really knows if that's going to really happen. So the uncertainty also is not helpful. So I think, if you ask, this is the most important topic of the town these days.
And so given now that there's that pressure on the smaller nations too that are caught in the middle of China and the US, well, what do you think China's best bet is when it comes to navigating these tariffs or as far as propping up its economy? Is it, as many are saying, or what China wants to believe, it's that its technological advances are the answer and that's unstoppable?
I mean, I think it's interestingly an opportunity for China to be really serious about what kind of economy it's going to have in the future. I mean, over the last 3-4 decades, China's economy has changed tremendously. Now it is the most important manufacturing powerhouse in the world, and likely to lead in technology fronts as well. And so, but China has lots of structural issues at home, right? So it used to be an export-oriented economy. Of course, over the last, 7-8 years, it's been trying to shift to be more domestic consumption focused. But, China needs more growth domestically. And it also has lots of debt issues, real estate bubbles, last year was a serious challenge. And so all these structural issues need to be addressed. And so it is, an opportunity for China to be serious about those reforms if there cannot be, other luxury or, options. So a lot of economists actually believe that if China manages this crisis well, it'll turn out to be actually, this trade war will do more good to China than damage. Now, that's, if China seizes the opportunity to do bold actions to have real reforms. And of course, nobody really knows what the trade war is going to end up with. The expectation is that, Xi Jinping and Trump will eventually have to sit down and talk about this. How long will this take? So, the damage won't be so severe on each other's economy and not just each other, but, the world. I think that's a huge question now.
And do you get the sense in Washington that there is room for compromise? Is there an atmosphere right now where you feel like there will be some talks and, there will be some give and take as opposed to what we've seen so far, the U.S. imposing this and, this is what's on the table and you're going to have to take it?
Yeah, I think if anything, we know Trump is someone who actually loves negotiation. So he's someone who does need to look like he is winning at the end, right? And so he probably didn't expect China to come back with such strong response, strong tariffs as well. But he's been saying, he's willing to talk. He has a good relationship with Xi Jinping. Now, the common understanding is that Trump really wants to talk directly to Xi Jinping about this. And he's not really letting people under him to have more authority to talk to China. Now, it could also be that nobody really knows what he really wants, so nobody feels very comfortable to take on that role. Whereas on the opposite side, China actually wants a very structured and very protocol-oriented dialogue, which means starting with a working level and then all the way up. Because, when you're putting two leaders together in front of the world, clearly a lot of agreements and work have to be done in advance. And, they don't want to run any risk of putting Xi Jinping with Trump when, who knows what Trump is going to say or do, right? So I think from, what I heard and from what's been covered in the news, that seems to be the deadlock.
And finally, Wenchi, I mean, if this trade war escalates further, what are the concerns you're hearing about in Washington for the U.S. and for the U.S. economy?
Well, clearly, people are very concerned about rising prices and inflation. And ultimately, right, how effective are these tariffs going to be in terms of bringing jobs back to the United States and bringing manufacturing jobs back to the U.S.? And is that something what Americans really actually want to do? There's so many questions, and it's very hard for people to really envision a future for America. So I would say that's the biggest worry. And of course, unemployment could rise when inflation rises, right? If wages don't go up fast enough. And so, Trump understands that as well. And he's now pressuring the Fed's chairman, Powell, to actually lower the interest rate. So, yeah, there's the political side of things, but there's also a lot of true economic and financial concerns.
Absolutely. From over here, it makes for some very interesting headlines, but at the same time, a great cause of concern because, it is the U.S. and there's always going to be a knock-on effect for us. Thank you so much, Wenchi Yu, Harvard Kennedy School Fellow, for joining us from Washington. As always, great to have you on Taiwan Plus. So who do you have your money on in the U.S. China trade war, and which economy do you think will take the greatest hit? Share your views in the comments section below. And don't forget to subscribe and hit the notification bell. And you can also click the video beside me to watch more on how China is preparing to tackle the U.S. tariff pressure on its exports and what lies ahead for its economy.